Hi, this is Scott Schubert, and welcome back. And today I just wanted to review what happened with our FOMC trading so that it can help you to really develop your skill in trading. This trade was planned for 2 days before the FOMC and executed in real time. And all of this happened in our live sessions, which you are all welcome to join at any time. You can just find out more information about how you can join that.
If you haven't been watching carefully every time there's news, you might think that that's just kind of random. But if you do look at what happens every time, you'll see that the probability that this actually forms this telling us what's going to happen is very, very high. So if you think, how many times has it just randomly done something that you weren't expecting? Extremely few times ever would it do that.
Unfortunately, I'm not able to put all of that in real-time live trading on YouTube, but this entry was planned for 2 days in advance, and the reason I will show you why we planned that entry. And the reason is because, let me just explain more clearly what I'm talking about here, is that this is the US dollar Dow Jones index non-weighted, and I'm looking at this to tell me how I'm going to trade the euro versus the dollar. And so once I determine what this is going to do at FOMC, then I would just enter the euro versus the dollar, or one of the other pairs that seems to be more desirable for trading at that time based on the patterns, based on the prevailing currency strength of different patterns, and the sentiment of the different currencies that are involved. So in a lot of our other videos on this time frame, which is the weekly, we have been covering this for a long time, and this is continuing the uptrend on the weekly, so we could obviously see that. And then once we drop down to the 12-hour or the 8-hour, we could clearly see that this is an uptrend and that the uptrend was not finished. Therefore, the news would produce a long entry period. And once we go down to the 2-hour or the 1-hour, you can see that this is a correction in an uptrend. Does that make sense? I mean, it's funny that I have to explain that to people, but the biggest challenge is that people don't believe that it could be that obvious and simple. I guess that's why people have a hard time, because they're making up a lot of other things. So you might think, well, that was just a coincidence. And that's what you would think if this was your first time to pay attention. Maybe you have been trading, you maybe have 40 years of experience, but you weren't paying attention to this, what I'm describing now. If you were, you would know the same thing that I know, which is that the probability of this happening is above 90 to 95%. Another way that you could test that to be true, to simply go back and look at all the FOMCs in the past. A lot of people say, well, can't look at things in the past because it's not current, it's not based on real-time trading, but at the time it was based on real-time trading, just like this trade right here was entirely based on entering it exactly at the real-time point where it was forming a turn. So as soon as I did this analysis, came to the conclusion within about a minute. So it took me about a minute to come to that conclusion, but I was reviewing it for 2 days before coming to the same conclusion. Then I just go to the euro. So once I went to the euro, what I was seeing on the chart was a correction in a downtrend. I determined that the next entry would be the end of a correction, and that would be a short. So determine that before the news came out. Now, a lot of times you might think in your mind, well, you never know what's going to happen with news. I think this also. These are thoughts that continue to run on in my mind prior to every big news event. I go, well, you just never know what's going to happen. But then I keep testing, and what I have found is that this has a 90 to 95% chance of happening. So this is not something that we just started doing today. This is something that I have been doing for a long time, and that's why I know the probability of this working. You will know the probability of it working if you look at charts and if you test and do this for yourself. But when you do, you may discover that there's a little bit more to the whole process on a daily basis of being able to identify the end of a trend, identifying the end of a correction, and being able to successfully identify these turning points and execute entries and exits consistently with accuracy and high probability over and over. There's a little bit more to it than what meets the eye, as I'm explaining here, even though it looks so obvious. When you look at it, does it look really obvious? If it does, you're on the right track, because what I'm focusing on here is that this is a trend and this is a correction. The next entry would be the end of a correction for a short period. So I've been able to identify that simple thing on charts. Doesn't have anything to do with my opinion, or especially not trying to figure out the economics of what's happening with the Fed and all this rhetoric going on between Trump and Fed Chairman Powell, doing this dramatic back and forth thing where also Yellen coming in and endorsing the rate cut, and all this stuff is going into the media. And do you think that if Trump wanted a rate cut, that would be something that he would communicate in absolute privacy only to the people who are involved? But when he tweets it out to the world and to the media, you know that that's all just trying to trigger our emotions about what we expect and trying to decipher all of that. You can almost never really come to a logical conclusion. The US dollar will go up with a rate cut. But looking at the charts, you can see what's going to happen every time, because you don't have to have any opinion. All you do is just say, oh, there's a correction. I'm looking for the end of a correction. And that has been working for me, and I really almost don't even want to reveal this secret, but if you haven't seen it yourself, you have to be blind. You're not looking. If you need help with this, let me know. Or just go to tradingmastermind.com, sign up for our free training, and we'll get you headed on the right track. In addition to this, guess what else happened throughout the time period leading up to the FOMC? I had entered a false breakout, made a mistake going short on gold, and I remained in that trade throughout the FOMC, and now it has formed a beautiful entry that is just fabulous. And why did I enter that? Why did I stay in that? The reason is because I read this pattern. See this pattern on this chart? Now I'm on the 12-hour. This is gold. If you read this pattern, then you would know why I went short. And then if I go to the 4-hour and you see this right here, and you understand what a chart is, what financial markets are, you would go, oh, okay, I see. Of course you went short there, right? What else would you say? And so, but there is more to it than meets the eye. Developing the actual skill of executing these trades day in and day out. If you need help with that, just go to tradingmastermind.com and sign up for our free training, or just let me know how things are going. So I hope that this has been a helpful update on our real live trading on the dollar, on the euro versus the dollar, and on gold. There's a lot more coming. The market provides a never-ending source of opportunity for trading, and it's just a continuous cycle of nothing but opportunities to trade. And so it's once you get this down, it's just a wonderful experience to be able to have that skill. If you'd like to have that skill yourself, I'd be glad to help you to develop that. Meanwhile, make sure that you go back and watch this video, so that you can find out more about what I have been showing before that can help you to develop your skill in trading. Okay, I look forward to seeing you in the next video.